My name is Leonardo Tamayo, and I will be doing the SWOT analysis for Progressive Insurance. Progressive Insurance is the third largest auto insurance provider in the nation, with over 12 million customers. It is a market leader in commercial auto insurance and has cornered the market as the largest seller of motorcycle and personal watercraft policies. It has been technologically ahead of its competitors. It was the first to set up a website, and it has just been named the #1 auto insurance website by Keynote Systems. Progressive has made shopping for insurance easy for its consumers with such programs as they were the first to introduce rate comparisons with other top companies, and they have also implemented a name your price option, where customers can choose the price they want to pay for their insurance, and Progressive will try to build up a policy to meet their budget. With premium rates increasing, there's also opportunities for increased commissions. There's also, with high levels of investment and fixed return, it's reduced the risk caused by change in equity investments. This will be discussed further in our financial analysis. As for weaknesses, insurance companies traditionally have been slow to respond to changes. One of the major obstacles may be the environmental changes. With the recent downturn in the economy, Progressive is not immune to that, so there's an increasing trend of financial weakness among insurance companies as well. As far as opportunities, there's opportunities to continue to expand their product base, ability to cross-sell financial services. It's something that's not been heavily tapped by insurance companies. Major threats would be competition. There's over 2,700 companies currently selling property and casualty insurance. So there is a pressure to continue to improve products and services and offer competitive pricing to retain customers. Another major threat are false insurance claims. So there's rampant fraud, and one of the largest categories to be affected by that is vehicle insurance, with such events as staged collisions and exaggerated collisions. Natural disasters, more of a threat over time, but something that could reduce surplus ratios. And next we have Alexander Wilson, who will be doing financial analysis for Progressive.
My name is Alexander Wilson, and I'll be presenting the financial analysis of Progressive Corporation. With the financial analysis, it requires us to look at the figures provided by the annual report and also compare them to the industry norms. In terms of the financial analysis, I'll discuss the liquidity of the company, followed by the operating ratios and investment strategy. Finally, I will refer to issues raised by Robert Hunter, the Director of Insurance for the Consumer Federation of America, concerning the prices set by Progressive and other insurance companies. The Progressive annual report actually separates the ratios provided on the different product lines. For the purpose of comparison to the industry, I will be providing the aggregate amounts. Now, although Progressive lost $70 million in the most recent annual report, this is not necessarily a completely negative fact, considering the other ways the company maintains funds. In terms of liquidity, the business has a current ratio of 2.4 to 1. This means that for every dollar of liability the company has, they currently have $2.4 to actually meet that debt. This is actually very good for the company, as it means should they need to liquidize the company for any reason, they're in a good place to do so. In terms of operating ratios, we'll first talk about the loss ratio. The loss ratio is actually the amount the company pays out per dollar of premium for each event that occurs. Now, the actual progressive amount is at 70.6%. So for every dollar that is provided for premium, 70.6 cents of that is paid out in the cost of claims made against the premiums. In terms of the industry, it is only 66.7%. Because of this, Progressive does have a higher amount, and from there we will move on to the expense ratio. The expense ratio is where the rest of the premium funds are taken from. It is in terms of administration costs, actually dealing with claims and other events. With the Progressive company, it is set at 20.7% for the most recent year, and 26.5% for the industry norm. This shows that Progressive is well in control of its costs compared to the remainder of the industry, which allows it to provide better services to its clients. Combining those two figures, we get the combined ratio. So for every dollar provided to the company, 91.45 cents of that is actually used on either expenses or loss concerning events. In the industry, the standard is 93.2%, so it shows that Progressive are actually keeping more money than their competitors. What we will also discuss now is the surplus ratio. Now, the surplus ratio is actually what the company intends to keep over the premiums they receive. Now, there are state requirements to the levels, and the surplus ratio set by Progressive is actually less than this amount, but it is still at a 3-to-1. So 3-to-1 basically means for every $1 of premium, they have $3 in funds available for those premiums. Now, considering that Progressive actually earned $12.8 billion in policies, that actually leaves over $1 billion in leftover surplus, which the company can then use for investments and other needs. In terms of its investment policy, Progressive actually protects their funds by targeting 75 to 100% of their assets in fixed return bonds and other negotiable instruments, and leaving the remainder in equity. For the last year, the fixed return was at 94%, and it was 6% for the equity. This means that any any changes in equity will not necessarily affect massively the actual company. The last thing I will mention on the financial analysis is the outside issues raised by Robert Hunter. And he does suggest that policy costs are too high because of the surplus funds. Now, it has been calculated that the estimated amount is $153 billion in surplus funds in the industry. Considering Hurricane Katrina, the biggest event in the last 100 years, caused $66 billion worth of damage, this may actually be true. With all those extra funds, if these events don't keep occurring, then there is extra money that could have been reduced in premiums. Good for the business and its shareholders, but maybe not for the customers. And to close off with a discussion about the graduate positions available to FIE graduates, I'm now going to pass to Diane.
And now to conclude this presentation, I'll discuss potential opportunities for FIU graduates. While still in school, students have the opportunity to meet with Progressive representatives at career or interviewing days on campus or at club events. Once you have joined the team, you'll be introduced to the systems and technological tools we use, participate in fun team building exercise, and receive industry knowledge you need to succeed at Progressive. Progressive will help you find an apartment, assist you in your relocation, and make sure you have everything you need for this next phase in your life. Progressive offers internship to highly motivated students who want to enhance their IT exposure while working for a Fortune 200 company. This concludes Group 5 presentation. Thank you for your time.